Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. On the gold market, retracement stands underway. So as we have discussed in our weekly research, in fact on the weekly chart we have the nicely looking bullish engulfing pattern right at 1180 area. At the same time, that is also very strong support. That was and is the monthly pivot support one. It's also ABCD target of the AB big CD pattern. So take a look. We have discussed it million of times already. So that's the AB equals CD target. This market has formed very nicely looking piercing in the cloud on the daily chart as to confirm this support area. That is also the daily oversold. The market has turned to some upward action. We said that that's normal, and market really could move from the oversold right to overbought. That's normal action. So reaction is equals to the counter reaction. And we said until market, and if market even will reach the 1250 area, that will not be the strategy, and that will not shift the long-term sentiment in the bullish side. That could be the just retracement before breakout and before the clear round of the 1180s. We are speaking about it again and again because that's experience tells. And that is the habits of the gold market. Gold market is a very cunning market, and it likes to show the visuality of some sort of rally that it's starting some reversal as market turns to the rally, and so on, to ensure some traders that really upward action has started and trend has shifting. But in reality, very often this leads to the returning right back down and taking out of the stops. Not only those traders who placed them a long time ago below 1180s, of some big traders, but also those who was attracted by this trap, this upward action, who thought that's really the rally has started. We do not really worry about this action to the 1250 because, as you know, the target of some pattern, and as we have on the weekly chart, is the engulfing. The target of the engulfing pattern is the length of the bars, and if you will calculate the length of the bars on the weekly chart, you'll see that it's target approximately 1250 area. That's why we just wait when this will happen, when the market will reach some resistance area, and later we will see what will happen. Because currently, guys, we also do not see any inflows in the SPDR fund. We do not see any changes in the sentiment and the positions of the big players by the CFTC report. We do not see no new money were inflowed in the gold market position. The open interest has slightly contracted when the net position in general hasn't changed since the previous week. It hasn't fell anymore, so the outflow of the money has stopped, but there is no increase in the net long position. So no new long bullish contracts were opened. So we did not see any real purchases, and we would not see any growing demand from the big players on the gold market. That's why I am not sure that any India festival demand and the demand from the individuals on the China and in Asia will play a significant role. I suspect that this impact really could be muted. This demand big players could use for the closing just some speculative positions. Well, that's why I'm not really fascinated with the current rally that we see, and I think that this is just a retracement. And probably until some moment we probably should treat it in this way, in this manner. We will see what will happen later, but with no inflation on the horizon, with the recession and some at least the shadow of the recession in the European Union, it's no perspective for the gold market to grow. because the driving factor of the gold is the inflation, not the physical demand. The physical demand usually stands static. It stands approximately on the 5,000 tons per year. It's very it's very easy forecasting issue, and hardly it will make the significant impact. It could support market, it could drive it in a row with some other factors, especially from the big players on the gold market, but it can't drive the factor by itself independently. That's why it could trigger some retracement, but this will be probably just retracement. In other words, our position in the long-term perspective is the same. We expect that after this rally, maybe it will hit the 1250 area. Sooner or later, market return right back down, clear out the 1180s. What will happen after that? This is a bit blurred perspective. Here we can't exclude that market really could start move to the upside and show significant bounce. If market will hold below 1180s, that will be the road to the next targets, so 11 even and 1050 as the ultimate downside target, as it points by our monthly butterfly. That's also could happen. In the short-term perspective, we take a look at the 4-hour chart. We see this. Yesterday we thought that this could be the head and shoulders. The market will show retracement right back down, but that hasn't happened. The market has broken up this resistance area. Also, market has exceeded the 618 extension of this ABC bottom, and that's why we can't exclude that market really could reach the 100% extension. That stands very close, as you can see, to the daily hour bot and 50% resistance. So I think that's an area, this market stands very close to the area where it's really could reestablish move down. But as we do not have any patterns yet, we just need to wait a bit when we will get them. But that's an area to watch for. It's 1240, 1250, when we expect that market really could turn to the downside again. That's our major point of view on the gold market by far.